You put me on? I didn't know. Okay. Welcome back. I was just chatting with my guest here, Dr. Bola Adigun, who is a partner, West Africa Corporate Finance Leader at Deloitte Touche. Welcome, Dr. Adigun, and welcome to the program.
Thank you very much. Our very own Nancy.
I told you guys, was it last week during the webinar, I said, you remember, could I give me an appointment letter? I should be working for Deloitte too. You know, since it's like a family now. So welcome to Abuja. And it's so nice to have you here, at least staying back to be on the show before you move over to wherever you're going to. You know, you're always globetrotting. So welcome to the program. Dr. Adigun, we're talking about attracting capital into Nigeria's gas sector. I do know at least that Nigeria is rich in gas more than crude oil. Like I said at the beginning of the program, 206 trillion cubic feet. That's the proven reserves that we have. Yet we're not doing anything with it. Gas flaring issues and all of that. What do you think really is holding us back? At least someone that is looking at that sector. Can you just briefly, like in 2 minutes, speak to me about the sector in general? Give me like a general overview.
Okay. Thank you very much. So the Nigerian gas sector is split between upstream, midstream, and downstream, right? And like you rightly pointed out, Nigeria is very, very endowed with gas, but a significant part of that gas is not properly monetized. So for instance, the Minister of State for Petroleum mentioned about, I think a couple of weeks ago, that over the last decade, between 2012 and 2022, over $70 billion have been invested in Africa. And of that amount, only 5%, which is about $3.5 billion, has come to Nigeria, the Nigerian gas market, or the Nigerian gas sector. And so, yes, Nigeria has a lot of gas. There's a lot of demand for gas, both locally and globally. Yet we are not maximizing the reserves that we have. Now, there are several factors that are responsible for this. One key factor prior to now was lack of clarity in the fiscal regime. So, you know, we had the PIB that was outstanding for many years, and thankfully that has been passed down, because before you make investment in gas is capital intensive. And before you make that investment, you want to be clear what the fiscal requirement, what the fiscal regime is, how much you need to put in, how much goes to the government, how much you can get back as return. So prior to now, that clarity was not there, and that sort of restricted the amount of investment that we we got in the sector. Another critical factor that has sort of deterred investment into the gas sector is project bankability. What do I mean? You know that prior to now, a lot of the projects in the gas sector have been tied to power, so gas to power. But you know the power sector has its own big problems, right? So projects that are just tied to the power sector from a gas perspective were not bankable, because even when you make those investments, there's a difference between attracting investment and sustaining investment. You attract the investment, but the investor doesn't get any return, right? So then you're unable to sustain investment in the sector. So yes, looking at it from the gas value chain, the upstream, the midstream, and downstream, you have to ensure that projects are bankable. There's clear fiscal regime where it is very clear what the laws guide, what the laws are, and how that plays out into your project financing.
Okay, so I think we'll break some of those things down, which you said, the fiscal regime requirements, and now with the passage or the signing of the PIA, you also talked about the bankability. We'll look at perhaps opportunities in the gas sector for business. What else again did you talk about? Okay, let's take a look at it from this angle, that if we have so much proven gas reserves, and what we've seen, at least gas to power investments are seemingly having a drag now because of what's happening in the electricity, in the electricity sector. How can we stimulate? Let me even start from those that are Nigerians that are listening now. How can we even stimulate gas utilization beyond cooking? Because you know, when we talk about gas, what an average Nigerian may think about, oh, okay, the gas in my house. You know, I did say earlier during my market analysis, what Ghana is trying to introduce, gas-powered vehicles and all of that. How can we stimulate gas utilization beyond cooking, and what other areas can we utilize gas?
Okay, so the law of equilibrium, demand and supply, comes to play here, right? If we have demand properly stimulated, then it makes your supply dynamics bankable. How do I mean? It means that you need to ensure that we are able to use gas beyond just cooking, like you rightly pointed out. And there's been initiatives by the federal government, the Ministry of Petroleum Resources in this regard. A very good example is the declaration of the Decade of Gas and the National Gas Expansion Program. That NGP program simply says encourage Nigerians to use gas, not just for cooking, but for instance, CNG for vehicles. So now you have gas-powered vehicles, gas-powered trucks, gas-powered generators. Is to ensure multi-use of gas. And that way you ensure that there's confirmed existing demand for gas. And in that instance, when you are then structuring the supply side to attract investment to the supply side, then the market is sorted.
Okay. So we can use gas beyond cooking. That's what I want Nigerians to understand.
Absolutely.
But with the government declaring the decade of gas, have you really seen any improvement in gas utilization? And we'll come back to the investment later. In gas utilization, of course, we know, okay, we should power, we can power our cars, CNG and all of that. But how much improvement have you seen since the government announced it?
I think there's been a shift a little bit. There's been a lot of emphasis on using gas to so you have conversion kits available at affordable prices where you can convert any vehicle, whether SUVs, sedan, you can convert them to gas to be powered by gas. And you find that the economics actually favor you running on gas as against petrol. It's environmentally friendly. The carbon emissions are better. The carbon footprints are better in line with climate change aspirations of the government. So we've seen a lot of emphasis now on evolving from evolving to use gas for other purposes, especially CNG. So you now have, at least I know a couple of companies that we work with at Deloitte where they champion the use of gas for vehicles, for trucks, for generators. So we are seeing those milestones. Can it be faster and better? Absolutely. But are we on the track? Are we on the right track? I think we are.
But the speed, we're not.
Well, so the speed needs external catalyst. And that's one of the things the CBN was trying to achieve with the financing for the NGP program, wherein businesses can get up to 10 billion naira at single digits to fund investment in other uses of gas.
Okay. Beyond what you've just said, are there other opportunities in the gas sector within the existing fiscal regime that we have? Are there other opportunities right now within this gas sector beyond what you have just said, perhaps CNG, conversion kits, cooking gas and whatever? Are there other opportunities within the fiscal requirements that we have right now?
They said they are. And so there are low-hanging fruits. For instance, you have gas fields where, with gas, you have associated gas and non-associated gas, right? So
what's the difference? Sorry, we need to break it down.
Okay, so when you produce oil, the associated gas comes along with production of oil, and that's what you typically sometimes flare, because sometimes the focus is on the oil and not on the gas. The non-associated gas, which is called the NAG, is separate. It's not attached to oil, and you have to come up with a monetization program for the gas itself alone. Now, if you look at, so you ask, the question is, are there opportunities within the current framework?
Yes.
There are, and these are more like the low-hanging fruit. So, for instance, where you have a field that is producing, that has an associated gas, you can put a program where you capture the gas you would have ordinarily flared, and you can convert that gas to either LPG or CNG for local communities and for the market. So, I'm involved in 2 projects that are in this regard, and they are very low-hanging fruit. They are not as capital-intensive as an LNG train, whatever. They are a lot more. The finance requirements are a lot more compact, and they are low-hanging fruits that you can sort of monetize immediately.
Are they export-oriented opportunities? Apart from, okay, NLNG, we do know at least NLNG, at a time when we had this gas issue that the prices of gas were going up and all of that, NLNG said at the time that, okay, we're going to stop exporting for now to fill up the domestic market because of the prices were increasing. Are there export-oriented opportunities too for gas within the fiscal requirement, or we are being bogged down again by infrastructure or structural factors?
So there are export opportunities, but then there are factors you need to consider to see if those export opportunities are viable. For instance, location analysis. How far away are you from the export terminal? Are there already existing evacuation facilities for gas-based evacuation facilities, or you have to invest in those facilities, in that infrastructure, which in some instances may affect the bankability or viability of your project. But beyond the export, there is a significant demand locally that is not currently fully met. Right, so you can have a project when phase 1 is to meet local demand, and phase 2 may be to target exports, depending on the volumes that you have at your disposal. Okay.
I know you've also a little bit alluded to some of the challenges that we have around the gas sector. Are there some other challenges you would like to talk about? You talk about even bankability, so if you would like to explain
Okay,
that.
so I can sort of break down project bankability a little bit. You know, project bankability is my bread and butter as a corporate finance partner at Deloitte. So there are things you need to have in place to ensure that your gas projects are bankable. One of which is project facing. Gas projects are capital intensive. That's the reality. So depending on the size or the volume you want to process, you can be looking at $250 million, $500 million. So project facing is very important. It means that you're able to face your project. Maybe the phase 1 is $50 million. You use that to prove the concept. You use that to demonstrate cash flows. And then your phase 2, phase 3 financing would be sort of easier to go through. Another thing you need to look at for project bankability is your funding mix. Because, I mean, what's the point where you have a project and all your revenue goes to debt service, right? So you want to be able to maximize whatever incentives the government has provided, and also get financing from DFIs, such you mix your financing. That way that will help the margins from the project, and it will ensure the viability of the project. Another thing I always emphasize to my client is currency matching. Okay. Especially where you are selling to the local market, where your revenue is nairalized. You should not go and raise the dollars, so you have dollar obligations on a naira income.
Okay. So it should be naira to naira.
As much as possible. Up to 70% of your funding currency should be your revenue currency. So it's called funding mix. It's called currency matching, so that even if there are devaluations and movements, the margins are able to accommodate these kind of shocks. You know, so those are some of the things that. And then security is a big problem. Security is a big problem. Why not sounding political or apolitical? You want investors to have confidence that their investments are safe. You want to be able to attract an investor and also sustain the investor. So you cannot overemphasize the importance of security. Security of your assets, security of lives is very, very important. And to consider the fact that, I mean, this data I gave earlier, 70 billion investment over the last 10 years in Africa, only 3.5 to Nigeria, means that Nigeria is competing globally for this investment. There are alternatives where this money the money can go to. So you have to ensure that you provide the right comfort, the right enabling environment to investors to ensure that the money comes here.
Now you said as a corporate finance leader, I would like to know some of the, perhaps, will I call it misconceptions that fund managers always have when it comes to investing in the gas sector. Are they like things that are not exactly true that fund managers would tell you is plaguing Nigeria's gas sector? Do you have any of those? What comes to your head quickly as I've...
Okay, so one of the things I always encourage project sponsor is that you need to have skin in the game. Okay. So someone comes and says, oh, Bola or Deloitte, we have this project, is $100 million. What do you have as a sponsor? I have the land.
Only?
Only. Okay. Come on, you need more than the land. You need the track record, you need the technical partners, you need some equity on the table. And then you can attract either debt financiers or other financiers to the table. So you need to have more than just the land, you know.
Okay.
Or the idea.
Or the idea, yeah. There's a gas policy, isn't it?
Yes, we have, I mean, so we have the gas master plan. There's been a lot of, so Nigeria does not lack policies. We have a lot of policies. But what we often have problems with is the implementation.
Okay, let's talk about the gas master plan itself. Since the gas master plan, what significant things have you really seen as an expert in that sector?
What it has done is it has encouraged indigenous companies to be bold enough to take on projects.
That's the local content part of it.
Absolutely. And also, you don't need to own a gas field to embark on a gas project.
You don't need to
own a gas field.
Okay, to own a gas project.
You don't need to, yes. So for instance, I can sponsor a gas project.
Okay.
I don't necessarily need to own a gas field.
Okay.
All I need to do is get into an offtake arrangement for my feedstock from a gas field owner. So what the master plan has done is has sort of decentralized and provided sort of a level playing ground for investors to step up and look at the opportunities in the gas value chain. Now, have we been able to fully maximize that opportunity? The answer is no. But the opportunities exist, and we increasingly see investors, sponsors looking at the value chain and saying, okay, I think I want to stay in the midstream in the processing, or I want to stay in the downstream in distribution, or I want to go upstream in the production. So that gives you that clear view to say, okay, where in the value chain do you want to position yourself, and what are the opportunities in that?
Yeah. Okay, there is this talk about energy transition, energy transition, energy transition. What is the big deal of energy transition? You know, and I think there's a Secretary General of the African, I can't really remember his name now, that did say at the time, or around this energy transition, that Africa should also be given, let's be given chance to develop a little bit. Because these Western people have developed to an extent. Now they say, okay, no, climate change or gas, energy transition, let us. So I want your view on that. And what's the big deal about energy transition? And are there opportunities, business opportunities around energy transition in Nigeria?
Okay, so, you know, climate change is a big deal right now. I mean, just yesterday I was looking at an article on Financial Times where international banks would be required to disclose carbon emission linked to their loan portfolios. So climate change is big deal. Carbon emission, carbon footprint is big deal. Now, the only way you can the only way as an oil and gas company that you can evolve is to transition your energy mix. So energy transition is big deal right now because producers, now look at it. Let's bring it down to the local, within the local context. There is declining hydrocarbon reserves, and there is increasing demand for energy. So oil and gas players, investors, they have the tough choice of either exploring further or transitioning into cleaner and alternative fuel. We know that gas, for instance, is a cleaner source of energy, or is cleaner fuel. So energy transition is to ensure that companies, the environmental impact of oil and gas activities are a lot lower from a climate change perspective. And now you find that countries, presidents, companies are committing to net zero. They are committing to a certain, they are committing to reduce to the reduction of their carbon footprint, the carbon emission from their business. And the only way we can achieve that is to transition the energy source. So that's why you find a lot of emphasis on alternative sources of energy like gas, solar, and all of that. And are there opportunities there? Absolutely. Absolutely. And it still comes back to, for example, within the Nigerian context, if you say if you talk about energy transition, a low-hanging fruit is gas. We have it in abundance, there's demand for it, and there are lots of outputs that you can generate from gas.
Dr. Adigun, I know we can go on and on if we start discussing this, because there are other issues which we didn't also delve into, gas flaring, the environmental concerns and all of that, but perhaps we'll do that on another day.
What's the problem?
Yeah. Thank you very much for coming.
Thank you, our very own Nancy.
Thank you very much.
Thank you.
All right, I've been speaking with Dr. Bola Adigun, who is a partner and West Africa corporate finance leader at Deloitte Touche. Just before I go, people don't know it's Deloitte Touche. Why? And it's still called Deloitte.
Well, it's Deloitte Touche, and it's also Deloitte.
And it's also Deloitte. All right.
Thank you.
All right, that's the much we can take on today's edition of the program. And indeed, this week has been a ride, and it's been so lovely anchoring this week. Please join me again next week, bright and early, Monday morning on this channel, African Independent Television, with another topic, another interesting guest. Be the best you can be the change that you want to see. I am Nancy Naji. Have a fantastic weekend. Bye now.